Okay, people, here we have your first problem in set 2. You have Houston Company. They bill the client $10,000 for consulting work completed. Okay, that's a account receivable. So they have this $10,000 account receivable, and what else do they have? Well, let's take a look. I don't see anything there on the screen, but maybe we need to scroll down, get our option, see what we find down there. We have an increase in revenue of 10,000. See if we can find that. Here we go. Next one. Contessa Company. They collected cash on an outstanding account receivable. And what did that do to the accounting equation? Well, it didn't do much. Total assets, total liabilities, and total equity are unchanged. Okay? Problem 3. Liabilities increased 74,000. Equity decreased 19,000. So we have a net change on the right-hand side of that accounting equation of 55,000. There's your first answer. Number 4, assets on the left, 365, equity on the right, 120. We need to balance that off with 245,000. How do we balance it? Liabilities must balance that accounting equation. So the second response. Here's a definition for you. Creditor's claim on your asset. That's got to be a liability. We'll scroll down and find that one. Number 6. Here's another definition. Decreases in equity from the cost of providing products or services. Okay, remember that income, which is revenue minus expense, is a component of equity. And so what are we looking at here? We're looking at an expense. Need to scroll down. There you go. Number 7, an outflow of cash or other resource from the business to its owners. Okay, so the owner said, hey, I need some cash or something else. It's presently in our business. I want to take it out for my own use. Okay, and so in that situation, you're going to reduce assets and equity. Okay, So let's get the right response there. Number 7, reduce assets and equity. Here we go. The next one, number 8, we have assets on the left, 700,000, liability on the right, 200,000. You have to balance that equation. How do we do it? Equity has to be 500,000. Number 9, here we have this owner of a legal service company, Marcia Boswell. She needs to be very careful to keep her personal financial information separate from her business. And that's an example of what? The business entity assumption. Business entity assumption. Let's find it. And then finally, here's number 10, equity on the right, 300,000, liabilities on the right, 192, the two combined, 492. Got to keep the equation in balance with assets at 492.